Thank you, Jazz. Good morning, ladies and gentlemen. I'd like to call this hearing to order and acknowledge that we're in Treaty 1 territory and the home and the traditional lands of the Ojibwe, the Cree, the Dakota peoples, and then the national homelands of the River Métis. Our drinking water comes from Shoal Lake First Nation Treaty 1 territory. My name is Ron Merritt. I'll be your chairperson this morning. Introducing the panel members is Gail Anderson, and with her, we have Kent Celine. Our recording secretary is Jaswinder Kumar, and representing the city of Winnipeg from the assessment department is Mr. Ryan Valderrama. This morning we'll be hearing an application of the assessment roll in accordance to the Municipal Assessment Act. The matters for which revision is requested has been described in each application and will limit discussions to those matters. The statements that are made at this hearing are sworn testimony. Anybody speaking in these matters must be sworn in. Please be advised that comparisons of assessments of properties are not considered evidence of market value by the Board of Revision. The board is appointed annually by City Council and is independent, along with the city administration. We make our decisions based on the evidence provided at the hearing and issue a written order that will mail to all parties as soon as possible. Please note that the board's decision in respect to application may be appealed to the Manitoba Municipal Board if the matter pertains to assessed value or classification, or to King's Bench if the matter pertains to application of exemption for taxation. Should you wish to appeal, information on how to do so will be included in the board's order. In respect to the hearing this morning, I will confirm the points of appeal with your property to be addressed with each of the applicants following the swearing in. We'll then have the assessor's testimony followed by questions that the applicant may have. Then it'll be the applicant's testimony followed by questions. Each side will have the opportunity to summarize if they wish. Once all evidence about the application has been brought forward, the applicant may leave. The process will repeat for each item on the docket this morning. The session will close after all the applications have been heard. The board will deliberate in private and make its decisions. You will receive the board's decision by registered mail as soon as possible. As information, all public hearings are live stream recorded and would be part of the public record. This morning, we have items 1 to 10 on our docket, and I asked Mr. Kumar to swear in the assessor and affirm the applicant's testimony. Mr. Kumar.
Thank you, Mr. Chair. Mr. Assessor, please state your full name.
Ryan Valderrama.
Thank you. Do you affirm that the evidence you are about to give at this hearing is the truth, the whole truth, and nothing but the truth?
I do.
Thank you. Mr. Neufeld, please state your full name.
Rocky Neufeld.
Thank you. Do you affirm that the evidence you are about to give at this hearing is the truth, the whole truth, and nothing but the truth?
Yes, I do.
Thank you.
All right, the first property that we have is a apartment building on 616 Strathcona Street. Mr. Valderrama, whenever you're ready, you can take us through this property.
And thank you, Mr. Chair. So the first property has a file number of 22-2750. The roll number is 13001989900. The property is located at 616 Strathcona Street. We're dealing with the roll year of 2023 using reference date of April 1st, 2021. The assessed value is $20,346,000. The property is classified as a residential 2 with a liability of taxable. The property is the residential apartment with 1 building, 7 stories. It has an actual year built of 1962 and an effective year built of 1994. It has 102 suites with 80 indoor parking and 35 outdoor parking. The property is zoned as commercial neighborhood with the land area of 77,311 square feet, a planned area of 17,022 square feet, and a gross floor area of 119,154 square feet. On page 3 is the aerial photo of the subject property. And on page 4 is the income valuation summary. Again, there are 122 units with an average monthly rent per unit of $1,415.88. The gross potential rent is $2,072,848. The vacancy rate is 3.2% or $66,331. The effective gross income is $2,006,517. The expense ratio is 44.23% or $887,482. The net operating income comes down to $1,119,035. Using or applying the capitalization rate of 5.5% on the net operating income, the capitalized income is $20,346,091 or $20,346,000 rounded. On the next page, page 5, are some rent comparables. The first one is located at 770 Algiani Drive. It has an average monthly rent per unit of $1,596. The second one is located at 1205 Grant Avenue. It has an average monthly rent per unit of $1,486. The third one is located at 180 Roslyn Road. It has an average monthly rent per unit of $1,547. And the last one is located at 800 Dover Court Drive. Monthly rent per unit of $1,496. On the next page, page 6, is the map of the subject property and comparable rents. On page 7, and page 8, Mr. Chair, if I may go through this, in the interest of time, this will be applied or carried over to the properties that we will be hearing today.
That's fine.
Thank you, Mr. Chair. Page 7, capitalization rates. A direct capitalization method is used to convert a property's single year of income into an indication of value by dividing the estimated net operating income by an appropriate capitalization rate. Capitalization rates can be derived from properties that have sold by dividing each property's net operating income by its sale price. For the 2023 general assessment, using April 1st, 2021 reference date, the capitalization rates were determined from model-generated estimates of net operating income and sale prices that were time-adjusted to April 1st, 2021. The assessed values produced by the application of these model-generated capitalization rates were compared to sale prices, and assessment to sale price ratios were calculated. The resulting ratio statistics for the assessment and taxation department's income-producing models satisfy the standard specified and set forth in the Standard on Ratio Studies as approved in April 2013 and published by the International Association of Assessing Officers. ATD's capitalization rates are further supported by comparison with real estate market reports from Colliers International Canada, CBRE National Research, and Cushman and Wakefield. The following chart compares ATD's capitalization rates with the published rates by fitting ATD's rates into the property type categories used in these reports. ATD's property type classes are more comprehensive so that they cover every property type in the city. The 20th and 80th percentiles show the range of capitalization rates used by ATD for 60% of the parcels within the specific property type. In many cases, the published rates fall within 20th and 80th percentiles, indicating the tenability of the capitalization rates derived by ATD. If we look at the chart in the multifamily section, we have all properties fall between 4.8 to 5.6 between 20th and 80th percentile. On page 8, the evidence, the following is a sample of actual sales that took place during the reference period. The purpose for showing these individual capitalization rates is to illustrate the accuracy of the model and substantiate the model-derived capitalization rates. They are not meant to be comparable specific to the subject property. Net operating income has been developed through stabilizing owner-reported income and expense information. Capitalization rates have been derived by dividing the property's net operating income by its sale price. So the first one is located at 2390 McPhillips, was sold on October 9, 2020 for $19.4 million. And the calculated cap rate for that one is 4.79%. The next one is located at 700 St. Mary's. It was sold on April 7, 2020 for $1,035,000. The calculated cap rate is 3.6%. The third one is located at 203 Bertrand. It was sold on June 14, 2019. It was sold for $925,000 and the calculated cap rate is 4.77%. Next one is located at 555 Corridor. It was sold on November 26, 2018. And the calculated cap rate is 5.74%. The next one is located at 677 Maryland. It was sold on December 15, 2020. And the calculated cap rate is 5.5%. And the last one is located at 32 Arden. It was sold on March 1st, 2019 for $2,875,000 and the calculated cap rate is 5.05%. On page 9 up to page 10 is the 2020 income and expense information for the subject property, and that's my presentation, Mr. Chair.
Thank you, sir. Mr. Newfield, questions of the assessor?
Yes. So just double checking something here. The valuation was all done by the model then? That's on page 4?
Page 4 are all model derived parameters, yes.
Okay. And in order, the input to the model then indicated a year of 1994. Is that correct?
The effective year built is 1994.
But this was actually built in 1962, correct?
The actual year built is 1962, yes.
And what possible work could have been done to change the remaining effective life?
Usually with this kind of change in the year built, it is a significant renovation that was done in the property.
And what would that be?
I don't have the permits attached, so I couldn't go into the detail, but it looks like it is a significant renovation.
Okay, but so you don't have the detail on it. So okay. What would if the property were age was set at 1962, would there be a change in the cap rate and the income?
I don't memorize the range of the cap rates in terms of the year built, so I'm not sure. I wouldn't be able to answer if there would be a change.
Your comparables, did you select these?
Comparables.
Page 5?
Page 5. Yes, I did.
So you don't have any in the West End where the subject is located. Would you think that it might be a good idea to compare it to apartments in its neighborhood?
Well, what I did here was I looked for apartments with almost similar bedroom unit mix and close to the effective year built. So it would be a challenge if it is within the close vicinity. But these are all, if I look at the map here, they're a little bit far, but I would say they are within the same bedroom mix.
Well, 800 Dovercourt was built brand new in 2013, and I watched it go up. It's far superior to the subject. I'm just wondering how you can possibly use that for a comparison, and being in a different part of town, different people who would be potential tenants, and this rent you're showing at $14.15 per month that you're trying to support. That's not the paid rent, is it? That's your rent.
Model.
Okay.
It's the model.
On page 2, you list 2 sales. Did you look into the sales?
These sales are dollar sales, like based on the timing of the registration date. It looks like it was for a financing and not really an arm's length sale.
It appears to be, but you didn't look into it.
I tried to look into it. It looks like it's not an arm's length sale.
It looks like, well, what would be that? I mean, I'm looking at the sale right now on Sabre and I know something about it. Well, don't you understand? This building has two owners, and when one owner sells his share, it gets reported as a sworn value instead of a consideration. Have you ever seen this before?
I haven't seen the Sabre sale, so I don't know that information.
Or land titles, or did you ask any of the owners?
No, I did not.
Okay. And the actual your NOI then is 1.1 million, and did you have a chance to review what the owners had submitted?
Yes, and I still went with the model on this one.
Okay. In terms of capitalization rate, you talked about other market participants on page 7. Do you know where it would fall in their categories, this building?
Not sure. I don't know. No.
Okay. And the ones that you brought forward, I think I heard you say they're not being relied on for this valuation, just samples. Is that what you said?
These are samples to show that the cap rate produced by the model is there's supporting the market in a way. It's not really to support the subject property, but
okay, that's what I thought you said. Yeah. Mm-hmm. Because number 1, which is your only one that's even close to the unit count, is brand new, correct?
Number 1 is built in 2015,
and then
relatively
sold.
Newer.
Okay, because that's not an effective year built. That is the actual year, 2015, correct?
Yeah, the year built is the actual year built.
And I've heard several of your colleagues state that they weren't planning on relying on 700 St. Mary's because it was an outlier. Do you share their belief?
Opinion. I value their opinion, so I'm not sure if it was really said. So I'm not sure.
Okay, that's fair. If you didn't hear that, if you didn't hear it, yeah, of course you don't have an answer. It's okay.
No, I don't know.
You are aware that 203 Bertrand did not sell for its income, that it sold as a development project, aren't you? I mean, I've testified this like about 100 times, and I can resubmit. But if you're aware of it, then we can dispense with that.
No, I'm not aware of it.
Okay. And are you aware that 677 Maryland was actually offered for sale by the vendor at a cap rate of, I believe, 7? I have it here somewhere. That their own internal cap rate was 7.29%.
It is their internal cap rate
on their list. On their 2020 sales listing.
And we calculated it differently, so I guess that's why it's registering at the 5.5%. We stabilized the income and then applied the sale price, and it comes up to 5.5%.
Okay.
Based on our calculation, at least.
And 32 Arden, was there any investigation on the purchase of the adjoining, the next door property by the same purchaser as an assemblage?
I'm not sure. No, I don't know.
Those are my questions. Thanks.
Thank you, Mr. Newfield. Ms. Anderson, questions of the assessor?
I have no questions. They've been asked and answered. Thank you for your presentation.
I thank you. Mr. Stilling?
Yes, have you inspected this property at all?
No, I haven't.
Do you know the last time it was inspected?
I don't have that information, so I wouldn't be able to know. No.
I'm just looking at the picture here on page 3. I'll give you a moment just to get to page 3.
Yes, I am on it. Thank you.
Awesome. So I'm making an assumption in front of the apartment complex. That's a pool that has the greenish water. And
Looks like it is a swimming outdoor pool, yes.
pool. And then if we look towards the apartments, I noticed there's a number of brown with white shading. Can you tell me what that is there? Is that like tennis courts, or is that more pools, or is that some sort of athletic complex that they have for the people that use the facility?
The brown, those three brown, irregularly shaped sections or areas, sir?
Yes, those three rectangular. They're sort of rectangular. Is that like some sort of complex there? Is that something for parking, or is that?
Just looking at the pictures here that I have, and I zoomed in, it's not that clear. It looks like it goes through the building. And the way I say it is, it's sort of like the entrance to the underground parking. So I'm not, it looks like an entrance to the underground parking, but I'm not really 100% sure.
Understood. Thank you for looking at that. Now this is obviously changed. It was built in 1962. There's a 1994 effective date on it. You're saying that you don't have any information on what that change was, or any permit information as well?
With this kind of change in effective year built, it is a significant renovation usually. So I'm certain. I think I'm almost certain that it is a significant renovation that was done in the property. As to the particulars of the renovation, like the extent of it, I don't have that information.
Thank you. That's all my questions, Mr. Chair. Much appreciated.
I thank you. Mr. Valderrama, I'm surprised
Yes,
really that, when the property, which is the subject, changes 30 plus years from when it was built, that there's no information in regards to, what sort of renovations took place. So you conclude that you never checked for permits or anything like that. You just mentioned that there was probably significant changes to the subject.
Mr. Chair, I just missed that one. But in my experience, usually when there are significant changes like that on the effective and the actual year built, or actual year built and effective year built, there's a huge difference. Usually it is a significant renovation that was completed on the property.
Yeah, so I guess
I just missed attaching the evidence, so I couldn't.
Yeah. But the effective date for the subject property, thus the cap rate of 5.5%, eh?
The cap rate, I believe, is based on the effective year built.
Yes. All right. I thank you. Mr. Newfield, your presentation, and it's our understanding, so everything is going. You represent one of the owners, correct?
No, actually, the owners apparently, Martello just let me know they got together and said Colliers should take over. I was probably joking a bit earlier there on getting half the value.
All right. So there is no presentation then from Altus then?
No, no, they have just said we should go ahead and finish it.
That's fine. The floor is yours, Rocky.
Okay, thanks. So the statement, first of all, I was just looking at the outside of it, and I did have a few more pictures, and it does look like from the roof, strange, and the green water is obviously doesn't look good. I found a better picture where the water was blue, and those different roofs are different portions of the main building. They just have a different roof finish, and it's does not appear to be a field house or an exercise facility of any sort. I'm just looking through the just to check on the building amenities. No, nothing of the sort. Seasonal pool, that's it. The rent roll and statement are attached, and we calculated it to 959,000. And I know I can tell you this because it's been entered in evidence, although withdrawn. Altus's number was 953,000. So independently of us, we were within $6,000 of each other on calculating a stabilized NOI. And we relied heavily on the last year, and they went back several years, and I think there was some poor production, poor outcomes in earlier years, like 2018. That may have influenced their lower number. So what we determined to stay with 959 is reflective of the market conditions of 2020 much better. The other difference is the cap rate, and the issue with the cap rate is obvious. I think that this is a 1962 construction and not 1994. You can't redo a building and say it's better and newer. I was looking at the outside pictures, and they show that the balconies were replaced, which really doesn't change your effective year much with a balcony that's newer. And there were, looking at permits, some repair permits rather than renovation permits. Apparently, they had some structural issues with their indoor parking, which is, of course, typical in our weather, and salt and all the other problems. So they seem to be repair based, not extending your economic life. So that was one issue with it. The other is location. It is close to Polo Park. It is separated by the creek, and it is still considered West End. I don't like saying stuff like this, but it is on the approach for runway 31 at Winnipeg Airport. Now, what this really means is that the aircraft coming in for landing will probably come down to about 3,000 feet above sea level, which is going to be about 2,300 feet above ground level, and the building being whatever stories this is, 7. Yeah, so it's going to be pretty close to 100 feet tall. So, the aircraft will come to about 2,200 above the building. There'll be noise when 31 is active, and 31 is active. Probably. Wait, before I start talking about aircraft, I can show you this. I got my license here, air traffic controller's license, pilot's license. 31 is active, I think, about 25% of the time, and mostly it's being used when aircraft come in from the east, and 36 is active. They'll take 31 as an alternative because it's a quicker approach, and they like the taxi back better. All things considered the same, because the winds are predominantly.
Well, you're getting off the subject, okay?
Yeah, I was enjoying it. It's my last day.
I know.
In any event, the main issue with anybody on the approach is that there'll be times of noise, and some people enjoy it, some people don't. The runway going the other way, 13, is rarely used because that's the takeoff. Because in that case, the winds would be coming from the southeast, which is very, very rare. It's usually, if you're coming from the south, it's 18. So you're not getting a lot of takeoff there. But still, it's a minor factor on it. And right now, everybody's heard that the reason I'm bringing this up, there's a big debate now in Polo Park where Shindico wants to put high-rise buildings in the old arena site, and Airport Authority doesn't want it. And the reason is that Airport Authority knows if they get noise complaints, it'll impact their night operations. And that's the only thing keeping Winnipeg Airport profitable is night operations. So there are some civic issues to deal with it. And it'll be a minor issue on the cap rate decision making, like, you know, maybe a tenth of a point sort of thing. It's still worth considering. Location is also on a back lane, and it's an older building, and the performance has been spotty. As I said, the Altus has got a history of NOIs that in the last 5 years have dipped as low as 239,000, although today 953 after at the current year. And I believe some of those performances were during the repair period. So that's just not great performance. And as far as the national reports, I can speak for the Collier's report, and this would be considered a suburban. I'm just trying to find my thing. A suburban low rise, and our range is 5 to 6%, and we're putting it at the higher end of that range just for the fact that, you know, a suburban low rise built in 1962 would indicate a higher cap because it is 61 years old, where an apartment's usually built to last 40 to 50 years. So right now you're in the life extension time of it. And repairs and maintenance are just increasing, and a location in the West End. You know, if this were located near Courts of St. James, it'd be a different cap altogether, because you're in that complex of Polo Park rather than separated. So I think that's pretty much. There was one more issue, and this is one to consider in the cap rate. You had two people file an appeal, and two separate owners, each owning an indivisible 50% share of the property. There is no law that says it's supposed to be fee simple. The law says the market value, willing seller to willing buyer. So when you have a dual ownership situation, the courts have recognized for a long time, that's called a partial interest, that there is a discount attributable to it. There are a few cases in Winnipeg where there are buildings owned by syndicates where they're done like this, and this would be the most obvious problem, because here we had two owners who didn't even know what each other were doing. They didn't know. One owner didn't know that I had been hired. The other owner didn't know Altus had been hired. So it's obvious that that's a factor, and it is a factor you're supposed to take into account. And in rebuttal, there's a very nice article on the discounts for partial interests, and as the courts have always accepted it. We're not suggesting a major issue, but generally what it amounts to is that the parties will have some difficulty making prudent decisions, such as, do we spend money on deferred maintenance or not? One party says, I don't want to, I want my dividends. The other one says, we got to fix it up for the future. That's the most typical problem. And we have buildings that get run down as a result of it. So I think it is an impact. And the last thing I was going to say is the sale the assessor has presented is valid. That was a 50% sale in 2018, just before our reference date of 6.4 million. So what the one half of it sold for that, which indicates 6,476 times 2, 12,952,000 sale price, February 9th, 2018. which not by coincidence was almost exactly what the assessment was in 2020 after I appealed it. That's my presentation.
Thank you, Mr. Newfield. Mr. Valderrama, questions of Mr. Newfield?
Yeah, just to clarify that sale, you mentioned it was a valid sale, half, you mentioned half interest, right?
Right.
And the sale date on it is prior to April 1st, 2018, right? Correct?
Yeah.
And so it was already considered. You also mentioned that it was already in the 2020 assessment, correct?
Yes.
And also during that sale of the half interest, was that prior to the renovation that was done?
That was after the alterations of 2006. It was after the plumbing repairs, after wiring repairs. I'm just going backwards. After some Power Smart. It was 1 second here. That was, what date was that? February 9th. It was during some work that was being done on it for the repair, structural reinforcing for the parkade floor. So that permit was taken out February 14th. The repair.
And so what year was that? February 14th?
2018.
Okay. And
so it was
that's all.
Yeah.
I think that's all the questions I have, Mr. Chair.
All right, thank you. Ms. Anderson?
I have no questions. Thanks for your presentation.
I thank you. Mr. Celine?
Rocky, have you recently inspected this location?
This is one of the few properties that I've never been in. So I can't say anything about it other than what I've seen from the ownership, the half owner.
Sure. You mentioned that the balconies were redone on this. What year was the balconies redone?
I think I can find a date on this. I was looking at this on Street View here, and let's see, July of 15, old balconies, and then I turned the corner, May of 21, new balconies. Okay, let me just see if I can pin that down a bit more dates. No, you know what? Google went by there in 15 and in 21, so sometime in between there.
15, 21, okay. You know why the date would have changed from 1962 to 1994 as far as the effective date? Was there major renovations done here back in those days, or what would have?
No, I mean, the only thing I'm looking at is in the 2015 picture, and then I go to the 21 picture. I can see what they've done is they've taken the balconies, and looks like the pad was reinforced because the newer pictures show. Oh no, that's not reinforced. That's where the poles were attached. So this, what do you call it? The fencing on the patios was changed, and there was cladding put on the patio sections over the brick, and the outside of the building had face brick, and that was covered with, it looks like an ephes layer, the insulated panel.
Sure.
And looks like windows were done. Yes, windows were done. So that would be the change between 15 and 21. And looking at permits, I'm seeing that there were permits that covered that period, and so I couldn't pin it down to a date, specific date. Other than the one that the structural repair was in February, and there was some envelope work done in February as well, and HRV units for each suite were done in 18. So that would be now what you're talking about. There are some thermal efficiencies, and of course that doesn't extend the life. What they obviously did. Now, looking at the statement, I see what they did is they offloaded their utility costs to the tenants. Because when you install an HRV unit in an individual suite, what you're doing is you're going instead of building heat, you're going to an individual heat, and by doing that, and that would be explain why Altus was showing. I mean, just want to double check this. Yeah, why the utilities dropped and why the NOI increased. Makes sense now. So anything that was done was like you didn't extend the life. You offloaded utilities and you made more money. So we are reflecting that more money because we're using the income from 2020.
There's nothing specific that you know that would have changed in 1994 that would have given us that effective date. There's nothing major that was done to the building. Like
no, I mean I think like the envelope. There's 5 elements of change: foundation, framing, envelope, mechanical, and finish. The obviously no foundation work. There was some structural, but it was repair, and then that was the parkade, and the envelope was clad, but it wasn't replaced. The windows were replaced, and the rest was clad. So I mean that's that doesn't make a building last longer. That just means it uses less energy. I have some doubts that anything really would have changed in the effective year. It's first of all, it's not a term we use in appraisal. We would use remaining economic life, and to extend the remaining economic life is a combination of capital work and just keeping in good repair. So if you have a building that it's not looked after and every 40 years you spruce it up, for example, you wouldn't be extending its life. You'd simply be catching up on deferred maintenance. I mean, it shows like it's newer, but the heart and soul is still old. And what I'm trying to say here is the city model is trying to take 2 things out of this. One is they want to show that it's got an income increase, and the other a cap rate decrease. Well, it's clearly got an income increase, and that was the result of any work being done. But that doesn't change the cap, because the cap is, the return to an investor, and that's not going to change with the work done. The money does, so the cash return increases. So that's how you get it out. You don't do both. And the other downside of thinking that a low cap for any work done. So when they did this work, it appears the potential income was about 1.5 million, and now it's about 1.7 million. So what they ended up being able to do was get a residential tenancy branch above guideline increases on the property. So it would cash flow better. And as I said, that doesn't change your life. It just improves your revenue, and we've taken that into account. It's not going to be a factor in the market in terms of an investor comes and looks at a building and someone comes and says, well, we're all redone. The first question will be, well, when was it built? Because you're inheriting a frame and a foundation from 62. So, I mean, I don't really know how to explain it any differently than that. But what I was saying about why the cap should actually be higher is because when you have an underperforming building that was generating 1.5, and you could do some renovations to increase the allowable rent rate under rent controls, you have an upside. So with an upside, you get a lower cap. Once you've done the work, there is no more upside. There's nothing more you can do to the building to get an increase from residential tenancies. So the cap is actually higher as a result of the lack of upside. And that's what I'm saying is theoretically wrong with the assessment department's approach. You've lost your upside, and and that's what a cap is all about. What the upside, the downside. Amen.
Thank you so much. Appreciate it.
I think I've said this before a few hundred times.
Thanks so much. Thank you, Mr. Chair.
Thank you. I have no further questions. Either party wants summation?
I don't, Mr. Chair.
Yeah, just briefly. I mean, I think the presentation is clear that the income is the actual income is the preferred method because it's proven by the market. Model is not proven by the market. The Act says market. The cap rate comments I meant, I think they're pretty pertinent. And other than that, it's been a very interesting year, and let's all go out being happy. For me, I'm done. Until business tax.
I thank you, Mr. Newfield. I thank you for your presentation, and I think that concludes your appearance here today. So, and results very shortly. So thank you very kindly, and have a good day.
Okay, thanks.
All right.
Thank you.
Thank you. Jazz.
Yes, Mr.
Yeah. Oh, okay. I think this is Mrs. Katz. Kat or Kate's? Kate's. Okay. We'll get you swearing in. So, Jazz, you can do the honors.
Yes, Mr. Chair. Ms. Kate, please state your full name.
Farrah Cates?
Thank you. Do you affirm that the evidence you are about to give at this hearing is the truth, the whole truth, and nothing but the truth?
I do.
Thank you. Please state.
All right, you can get comfortable, and we will go to the property that you're, one of the properties, which is 1944 Main Street. So if you're okay, we'll have the assessor go through the property.
Sounds good.
Mr. Vanderama, whenever you want, you can take us through the 1944 Main Street.
Thank you, Mr. Chair. Next property has a file number of 22-2173. It has a roll number of 11030 516000. The property is located at 1944 Main Street. We're dealing with the roll year of 2023 using reference date of April 1st, 2021. The assessed value is $1,975,000. The property is classified as a residential 2 with the liability of taxable. The property is a residential apartment with 1 building, 2 stories, actual and effective year built of 1960. It has 23 suites with 12 outdoor parking. It is zoned community with land area of 13,323 square feet, a planned area of 7,546 square feet, a basement area of 7,546 square feet, and a gross floor area of 22,638 square feet. On page 3 is of the subject property, and on page 4 is the income valuation summary. Again, there are 23 units with an average monthly rent per unit of $911.30. The gross potential rent is $251,519. It has a vacancy rate of 4.2% or $10,564. The effective gross income is $240,955. And expense ratio is 56.97% or $137,272. The net operating income comes down to $103,683. Applying the capitalization rate of 5.25% on the net operating income, and the capitalized income is $1,974,914, or $1,975,000 rounded. On page 5 are some rent comparables. The first one is located at Inkster Garden Drive. It has an average monthly rent per unit of $1,196. The second one is located at 455 Lila Avenue. It has an average monthly rent per unit of $1,128. Third one is located at 311 Partridge Avenue. It has an average monthly rent per unit of $1,158. And the fourth one is located at 1164 Jefferson Avenue. It has an average monthly rent per unit of $1,097. And on the next page, page 6, is the map of the subject property and comparable rents. On page 7 is the capitalization rate chart. And on page 8 is the capitalization rate evidence. Beginning of page 9 up to page 11 is the 2020 income and expense information for the subject property. And that's my presentation, Mr. Chair.
I thank you. Ms. Katz, questions of the assessor?
Yes, thank you. So if we turn to your rent comps on page 5, would you agree that comps 1, 3, and 4 are in different neighborhoods than the subject?
1, 3, and 4. Let me just Partridge. Let me just check. I do have the map on page 6. So the closest are Lila and Partridge to the subject property. The other two, Jefferson and Inkster, are a bit further west. However, they are all considered within the same market region. They may not be within the same neighborhood, but they are in the same market region.
Okay. And are you aware that comps 1, 2, and 4 are listed as having been recently renovated?
No, it's just I'm basing it on effective year built when I chose the rent comparables.
Okay. And would you agree that comps 1 and 3 appear to have larger units than the subject?
Larger units, looks like they have, yes, based on gross floor area per unit.
Okay. So if we turn to your cap rate table on page 7, in looking at your cap rate range that you have, can you provide any information on the sales being used that are achieving those ranges, such as how many sales, in what areas, etc.?
None. I don't have it. I don't have that information in my evidence.
Okay. And the broker cap rates, as you mentioned earlier, they're used as further support for the assessment department cap rates. Is that correct?
It's more comparing where we are at compared to these external sources.
But it does say in the text they're used as support, correct?
To support. Let me just double check on that one, just so. Yes, they are supported. It says further supported. It's more of yes, in terms of specific property types. You're correct.
And would you agree that they suggest nothing lower than 5% for low rise, with CBRE suggesting nothing lower than 5.25%?
It looks like yes. They do have a higher lowest cap rate. However, we have more comprehensive inventory. I would say between 20th to 80th percentile.
Okay, so in turning to the income value summary on page 4, would you agree that the subject property at 5.25% would be on the low end of the range they suggest?
That they suggest, yes, not in our inventory, no.
Okay, and then on your cap rate evidence on page 8, have you provided any of the workups as part of your evidence?
No.
Okay, thank you. That would conclude my questions.
I thank you. Ms. Anderson?
Just in regards to the building, there's 23 suites and there's 12 outdoor parking stalls. So there isn't sufficient parking for all the suites. I'm just wondering where that is taken into account in the city's model.
I'm not sure if where in the city's model it is being taken into account. However, we can parking is more of an added income. So it means that not everyone would really expect to have in the market, the tenants usually they just, not all of them have cars or would have a need for parking. So in terms of that's why they're separate in terms of their income, the rental and the parking rent. So I don't see that I don't see any deterrent in terms of the way the income or the model is determining the gross potential rent. So it's an added income to the sorry, I'm lost. To the apartment block. That's what I'm looking for. It's more of an added income. So the model that we have is more depicting potential rent in the market rather than other incomes included in our effective gross income. So we don't register other income. So I don't know where it is falling under, to be honest, in terms of the parking ratio and the total units.
Okay. So in regards to the cap rate of 5.25%, it does appear to be on the lower cap rate. The year of the building is 1960. So I'm just wondering what factors would trigger that low of a cap rate?
Usually the factors that trigger the cap rates would be the size, the effective age, and the location of the property. In this case, if we're gonna, I don't want to compare it. I don't want to compare assessments because the other property that we had is way bigger than this one. But I mean, it's more of like comparing assessments, right? So this one is, I think, considering more on the size, right, rather than that's why it's registering at the low end of the capitalization rate.
Okay. Okay. Thank you very much for your presentation. Those are all my questions, Mr. Chair.
I thank you.
Thank you.
Mr. Salim?
Yes, 1944 Main Street. Can you tell me what the cross street is closest to this location?
Let me just zoom into that. It's close to Lila. I think Lila and Partridge are in the south. On the map that I provided on page 6.
Okay, so
it looks like that's it looks like that's Lila and Partridge.
Lila, okay. So you'd probably need a car in this location, especially if you're out on Lila.
I'm sorry. Go ahead.
No problems. You can respond if you want. Have you inspected this property at all?
No, I haven't.
You haven't. Okay. That's all my questions, Mr. Chair. Thank you very much.
I thank you. Ms. Gates, your presentation?
Thank you. So if you turn to page 2, you'll see our requested assessment of $1,627,000. On page 4, we have our property description. So the subject property is located on Main Street between its intersections with Lila and Newton in the Margaret Park area of Winnipeg. The property is a 2.5-story apartment built in 1960, and the land size is approximately 13,000 square feet. There are 23 units, including 8 one-bedrooms and 15 two-bedrooms, and there are 9 outdoor parking stalls noted. So you'll see we have an aerial view of the parcel. And then on the next page, we have a Google Map view of the neighborhood. If you turn to page 8, we have an overview of our income approach. So the main contention would be on the cap rate. We are disputing the assessor's cap rate of 5.25, and we're using a cap rate of 5.5 based on our cap rate study. And I'll briefly run through the cap rate study in a bit, but just as an overview, the first table shows our base cap rates, which are stratified by effective year built, and they're assuming good quality properties in good locations. And the second table considers all of the factors that we look at for the property and where we make an adjustment. In this case, the base cap rate for a property of this age is 5.5, and we've not made any adjustments given the balance of the positive and negative features of the property. So if you turn to page 9, we have our income and expense breakdown. So we are using rents of $221,550 based on the actual 2020 income of the property. We've applied a market vacancy rate of 4.2%. And I note the actual vacancy of the property is lower than 4.2%, but it is our practice for these valuation assignments to use a market level vacancy, as we're looking at it from the perspective of a prudent purchaser. And a prudent purchaser wouldn't reasonably expect the vacancy to continue at 0% or 1% for the life of the property. So that is why we use a market level vacancy, and anything kind of within that range of 3.2, 4.2 makes sense. But we note that this area has an average of 4.2, so we've used that in our valuation. So when accounting for the other forms of income, we have an effective gross income of $220,600. Now for expenses, we look at 3 years of expenses where we have the data as we do here. So you'll note in the remarks column that we put a comment if something is an average or a percentage. If nothing's stated, it could be assumed that we're using the most recent year of expenses. So for certain items like insurance, utilities, those items tend to just increase over time. So we would use the most recent year, but items that can fluctuate, such as waste and snow, advertising, leasing, etc., we would use an average just to smooth that out. So our expenses include stabilized repair and maintenance at $1,991 per unit. And we have a detailed breakdown of our repair and maintenance in the brief. So if you could go to page 23, and I'll just go through the detailed repair and maintenance breakdown for this property, and then it will follow through for the remaining properties we have. So on page 23, you'll see we have 5 years of repair and maintenance data, as well as an itemized breakdown. So at the bottom of the chart, you'll see we have the repair and maintenance total. Underneath that, we have repair and maintenance, less capital expenditures like extraordinary repairs, roof, hot water tank. And we also take out waste and snow as we stabilize that item separately. And then on the bottom, we have the repair and maintenance per suite, which is not stabilized. So where we do our stabilizations is toward the right-hand side of the sheet. So you'll see that certain categories being flooring replacement, appliance replacement, painting and counters, cupboards and carpentry, those have maximum values in place. Where we've gotten those maximum values is from discussions with property managers and other knowledgeable players in the market to determine what reasonable values per suite for those categories make sense. And then in terms of other stabilizations, we would go through and check for outliers, and we would exclude those from the analysis. So you'll see where we've done that, we've marked those in red and then also made a note on the chart. So I believe that would kind of tie together the expenses. So if I could just go through the cap rate study briefly. So if I could ask everyone.
Yeah, could you make it briefly? We've heard it, many times, unfortunately, but if you could be brief, that would be appreciated.
Sounds good. I will give a very high level.
Okay.
So starting on page 2 of the cap rates, what we start with is looking at the city's ranges they suggest. They show anything from 3.85 to 7.4, with most falling within that high 4 to mid 5 range. We also look to the broker reports, and the important takeaways here is they're suggesting nothing lower than 5% for low rise. As well, we're seeing low to no compression from last cycle, and where we see compression, it's for the best stock. So a lot of the properties we're going to be hearing today is kind of that mid-range product. So we're going with 5.5s for many of the properties today. And I think that's well supported by both the city and the brokers' ranges. So if you go to page 4, this is just some discussion of all of the factors we consider. So not all factors would be relevant to all properties, but just some things we look at particularly would be things like building amenities, as tenant preferences have changed and there's more demand for those. As well, we consider parking. Anything less than 1-to-1 would be kind of insufficient. As well, we look at suite mix and suite size. We see people are spending more time at home, and so demand for larger suites has grown. So things that are skewed toward bachelor and 1-bedroom would not be as desirable. On page 6, we have our cap rate sales, the first 3 being the most pertinent to this cycle. We've also included some older sales just to show how our cap rate position has evolved, as well as to bolster our age categories further. And then on page 7 at the top, we have a sale price per suite chart stratified by effective year built, just as another metric to look at. And then the middle to bottom of page 7 are those 2 charts that will show up in the remaining briefs today. And then that would conclude the report section. The remainder would just be appendix. So I'll leave the cap rate discussion there, and I'll just go back to my main brief on page 9, just to wrap this up. So back to the main brief on page 9. So our NOI is $89,503, and with our 5.5% cap rate, we get an indicated value of $1,627,000, which works out to approximately $71,000 per unit. And then our appendix starts on page 11, and what I've included is the city valuation as well as the financial statements that we've looked at. And that would conclude my presentation on this property. Thank you.
I thank you very kindly. Nice presentation, by the way.
Thank you.
Mr. Valderrama, questions of the applicant?
I have none.
Ms. Anderson?
No, I have no questions. Thank you. Thank you for your presentation.
Thank you. Mr. Sealing?
Yes, have you inspected this property?
I've not inspected any of the properties today on our docket.
Based on the fact that this location, according to the city, I think it said it had 12 outdoor parking stalls. Did you say this one has 9?
Yeah, that's what our records showed. It had 9 stalls. But either way, we haven't made any type of adjustment for parking. So so we generally look at what the client information shows. So sometimes there are some small discrepancies.
Based on the information that you were just presenting in the bylaw, it says 1.5 stalls per suite. Would this be an adequate amount of parking for 23 units, whether it be 9 or 12?
That's a good question. Regardless of if it's 9 or 12, it would be insufficient parking. The bylaws, they suggest something higher. When we're looking at a property, we would consider anything less than 1-to-1 to be insufficient parking.
Okay, thank you very much. That's all my questions, Mr. Chair.
I have no questions. Thank you. Summation, either party?
I have none, Mr. Chair.
I'm good also. Thank you.
All right. Let's go on to further down the street, 2130 Main Street. Mr. Valderrama, whenever you're ready, you can take us through this.
Yeah, thank you, Mr. Chair. Next property has a file number of 22-1973. It has a roll number of 11-051-797-950. Property is located at 2130 Main Street. We're dealing with the roll year of 2023 using reference date of April 1st, 2021. The assessed value is $8,170,000. The property is classified as a residential 2 with the liability of taxable. Property is a residential apartment with 2 stories, with 2 buildings, 3 stories, and an actual and effective year built of 1971-1972. It has 75 suites with 86 outdoor parking. It is zoned as residential multifamily with a land area of 82,844 square feet, a planned area of 21,750 square feet, gross floor area of 65,250 square feet. On page 3 is the aerial photo of the subject property. And on page 4 is the income valuation summary. Again, there are 75 units with average monthly rent per unit of $1,001.18. It has a gross potential rent of $901,062. It has a vacancy rate of 4.2% or $37,845. The effective gross income is $863,217, and the expense ratio is 50.31% or $434,284. The net operating income comes down to $428,933. Applying the capitalization rate of 5.25% on the net operating income, the capitalized income is $8,170,152, or $8,170,000 rounded. On page 5 are some rent comparables. The first one is located at 1055 Power Street. It has an average monthly rent per unit of $980. Second one is located at 1245 Jefferson. It has an average monthly rent per unit of $1196. The third one is located at 707 Lila Avenue. It has an average monthly rent per unit of $1061. And the last one is located at 445 Partridge Avenue. It has an average monthly rent per unit of $1,271. Next page is the map of the subject property and comparable rents. On page 7 is the capitalization rate chart. On page 8 is the capitalization rate evidence. Page 9 up to page 10 is the 2020 income and expense information property, and that's my presentation, Mr. Chair.
I thank you, sir. Ms. Cates, questions of the assessor?
I have no new questions. Thank you.
I thank you.
Thank you.
Ms. Anderson?
I have no questions, thank you.
Thank you. Mr. Selene?
No questions, Mr. Chair. Thank you very much.
I conclude that, Ms. Gates, your presentation, but you're within $1,000 of your NOI, so it's just a matter of cap rate, but you may proceed with your presentation, Ms. Gates.
Okay, thank you. So if you turn to page 2 of our brief, you'll see our requested assessment of $7,819,000, as well as some exterior photos of the property. So our property description can be found on page 5. So the subject property is also on Main within the Margaret Park area. And I believe the assessor has touched on a lot of the details of the property. So you'll see here we have our aerial view and our Google Map view on the next page. And if you turn to page 9, we have the overview of our income approach. So the contention here would be on the cap rate. So similar to the prior property, we are disputing the assessor's cap rate of 5.25, and we're using a cap rate of 5.5. That would be our base cap rate, and we've not made any adjustments, but you could see here all of the factors that we considered for this property. So as you stated, we are very similar on NOI. We're coming in slightly higher at $430,051 based on the actuals. So with our cap rate of 5.5, that gives us our indicated value of $7,819,000, which works out to a value of $104,200 per unit. So if you turn to page 12, that would be the start of our appendix. So we've included some interior photos that were available. So you'll see that we haven't made any condition adjustments. They're in decent condition for what they are, but they are more basic finishes. And then we've also included the city valuation, the financial statements that we've looked at, as well. Our repair and maintenance breakdown can be found on page 30 for your reference. And that would conclude my presentation on this property. Thank you.
I thank you, Ms. Gates. Mr. Valderrama, questions of the applicant?
I have no questions. Thank you.
I thank you. Ms. Anderson?
I have no questions. Thank you very much for your presentation.
I thank you. Mr. Selene?
No questions, Mr. Chair. Thank you very much. Great presentation.
Thank you. Either party want summation?
I don't have any, Mr. Chair. Thank you.
No, thank you.
All right, we'll go to the next property, which is 133 Madison Avenue East. Mr. Valderrama, whenever you're ready.
Thank you, Mr. Chair. The next property has a file number of 22-3237. It has a roll number of 14071843100. The property is located at 133 Madison Avenue. We're dealing with the roll year of 2023 using reference date of April 1st, 2021. The assessed value is $7,064,000. Property is classified as an institutional property with the liability of taxable school exempt. The property is a residential apartment with one building and 5 stories. It has an effective and actual year built of 1991. It has 62 suites with 62 outdoor parking. Property is zoned as residential multifamily with a land area of 78,775 square feet, a planned area of 12,973 square feet, and a gross floor area of 64,865 square feet. On page 3 is the aerial photo of the subject property. And on page 4 is the income valuation summary. Again, there are 62 units with $966.59 as average monthly rent per unit. It has a gross potential rent of $719,143, a vacancy rate of 4.2% or $30,204. The effective gross income is $688,939. The expense ratio is 50.27% or $340,330. The net operating income comes down to $342,609. Applying the capitalization rate of 4.85%. Capitalized income is $7,064,103 or $7,064,000 rounded. On page 5 are some rent comparables. I believe, Mr. Chair, they are the same as the previous property. So I'll just go through page 6, if I may, Mr. Chair.
That's fine.
Yeah. So the page 6 is the map of the subject property and comparable rents. And on page 7, the capitalization rate chart. And page 8 is the capitalization rate evidence. And on page 9 to page 11 is the 2020 income and expense information for the subject property. And that's my presentation, Mr. Chair.
I thank you, sir. Ms. Cates, any questions of the assessor?
Just a few, thank you. So would you agree that properties built for seniors housing tend to be built to a bit more of a basic standard than market apartments?
I have not been in this apartment block, so I'm not sure what basic or what the build is for this specific apartment block.
Okay. And then looking at your income value summary on page 4, so the property's been assigned a cap rate of 4.85. Would you agree that that would either be on the very low end or below the broker ranges?
It's on the almost on the 20th percentile of our cap rate chart.
Okay. But in terms of also the broker information you provided, it would be likely below that as well, correct?
Yes.
Yes. Okay. Thank you. That would conclude my questions for this property.
Thank you, Ms. Cates. Mr. Anderson?
I have no further questions. They've been asked and answered. Thank you.
I thank you. Mr. Celine?
Has this property been recently inspected at all?
Don't have the information when it was last inspected. Personally, I haven't inspected this property.
Thank you very much. That's all my questions, Mr. Chair. Thank you.
Thank you. I have no questions. Ms. Cates, whenever you're ready, you can take us through your presentation.
Thank you. So if you turn to page 2, you'll see our requested assessment of $6,280,000, as well as an overhead view of the property and a front view from their website. So our property description is on page 5. So the subject property is located on Matheson Avenue East at its intersection with Cochrane Street in the Seven Oaks area. The property is 5 stories, built in 1991, With an approximate land size of 1.8 acres, there are 62 units, which are skewed toward one-bedroom units, and there are 60 outdoor parking stalls noted. So you'll see below the photograph of the parcel, as well on the next page, a Google map view of the neighborhood. So if you turn to page 9, we have an overview of our income approach. So for the purposes of this report, we are disputing the assessor's cap rate of 4.85%. We are using a cap rate of 5.5% based on our cap rate study. So with many seniors apartments, we would consider adjustments if they have issues such as low parking, small suites, and inferior suite mix. But in this case, in looking at all of those features, we decided not to make an adjustment as the suite sizes weren't below what we would expect for apartments. As well, their parking ratio is within check. So we've applied a 5.5 and feel that's reasonable for this property. So if you turn to page 11, we have our income and expense breakdown. So we've used the actual income of the property of $707,318. We have applied a market vacancy rate. And when accounting for the other forms of income, we have an effective gross income of $694,967. In the case of this property, we did not have access to full 2020 expenses. So what we've done, we've looked at the city's expenses they've applied, and we felt that that made sense for the property. So we have used the same expense ratio of 50.3%. So we have an NOI of $345,399, and with a 5.5% cap rate, gives us an indicated value of $6,280,000 rounded, which works out to approximately $101,000 per unit. So our appendix starts on page 13, and I have some interior photos of the common area, as well as the city valuation and the various financial statements. And then we do have some repair and maintenance analysis on page 27, but we don't have the itemized breakdown for this property as we have for some of the other properties on the docket. And that would conclude my presentation for this property. Thank you.
I thank you, Ms. Gates. Mr. Valderrama, questions?
I have none, Mr. Chair. Thank you.
Thank you. Ms. Anderson?
I have no questions. Thank you for your presentation.
I thank you. Mr. Seling?
No questions, Mr. Chair. Thank you.
I have just one. Ms. Cates, based on the age of the property, it's 1991, possibly using a lower cap rate of maybe 5.2. Did you consider that, or are you still going with the 5.5?
We're still going with our 5.5. Just the way our cap rates break out, we classify kind of 1 to 5 stories and then 6 plus. So given that this is 5 stories, our base cap rate would be 5.5. So we do feel confident going with that as well. You can see from the photos that while the property is in good condition, there are more basic finishes just given the nature of the property. So I feel confident that the 5.5 does make sense.
All right, I thank you. Summation, either party?
I have none. Thank you.
I'm good also. Thank you.
All right, let's go on to 1180 McPhillip Street. Mr. Valderrama, whenever you're ready.
Thank you, Mr. Chair. Next property has a file number of 22-1564. The property has a roll number of 14060900000. Property is located at 1180 McPhillip Street. We're dealing with the roll year of 2023 using reference date of April 1st, 2021. The assessed value for the property is $1,808,000. The property is classified as a residential 2 with a liability of taxable. The property is a residential apartment with 1 building, 2 stories. It has an actual year built of 1960 and effective year built of 1976. It has 17 suites with 11 outdoor parking. The property is zoned as residential multifamily with a land area of 10,796 square feet, a planned area of 4,853 square feet, a basement area of 4,853 square feet, and a gross floor area of 14,559 square feet. On page 3 is the aerial photo of the subject property. And on page 4 is the income valuation summary. Again, there are 17 units with average monthly rent per unit of $918.74. The gross potential rent is $187,423. The vacancy rate is 4.2% or $7,872. The effective gross income is $179,551. Expense ratio is 51.16% or $91,858. The net operating income comes down to $87,693. The capitalization rate of 4.85% when applied to the net operating income gives a capitalized income of $1,808,000 or $1,808,103 or $1,808,000 rounded. On next page, page 5 are some rent comparables. The first one is located at 195. The average monthly rent per unit is $999. Second one is located at 201 Belmont Avenue. There's an average monthly rent per unit of $1,003. Third one is located at 1035 Power Street. It has an average monthly rent per unit of $1,057. And the last one is located at 445 Partridge Avenue. And it has an average monthly rent per unit of $1,271. On page 6 is the map of the subject property and comparable rents. On page 7 is the capitalization rate chart. On page 8 is the capitalization rate evidence. And beginning of page 9 to page 10 is the 2020 income and expense information. And that's my presentation, Mr. Chair.
Thank you, sir. Ms. Gates, questions?
I have no new questions. Thank you.
Thank you. Ms. Anderson?
Is there a note on file as to when the last inspection of this property was?
I don't have that information when it was last inspected.
Okay,
Personally,
and you haven't inspected the property, correct?
No,
Okay.
I haven't.
Thank you. Those are all my questions.
I thank you. Mr. Celine?
Yes, can you tell us the cross street of the location on McPhillips? What's the closest cross street?
1180 McPhillips. The property is south of, I believe that one is Inkster Boulevard. Just south of Inkster Boulevard. It's
Awesome. Thank you very much. Appreciate it. Thank you for your presentation.
Thank you. Mr. Valderrama, your cap rate of 4.85 seems to be a little low based on the age and so comments?
Again, this only has 17 units, so it's a smaller property. I believe that that took into account when the model considered a 4.85% as a cap rate.
All right, I thank you.
Thank you.
Ms. Gates, whenever you're ready, you can take us through your property.
Thank you. So if you turn to page 2, you'll see our requested assessment of $1,707,000. And we have some exterior photos from different angles. On page 5, we have our property description. So the subject property is located on McPhillips Street at its intersection with Atlantic Avenue in the Minarski area. The property is a 2.5-story apartment built in 1960 with an effective age of 1976 assigned. And the land size is approximately 10,000 square feet. And there are 17 units, which are all 1 bedrooms. And there are 11 outdoor parking stalls noted. So you'll see the aerial view of the parcel and the Google Map view of the neighborhood on the next page. So as an overview of our income approach on page 9, we are disputing the assessor's cap rate of 4.85%. And we're using a cap rate of 5.5% based on our cap rate study. That would be our base cap rate using the effective age, and we've not made any adjustments. We are of the opinion that a cap rate at 4.85 that the city's using is far too low for this property. And this idea that smaller properties would attract more investors and drive down the competition so much, it wouldn't to this point for a property like this. And if anything, a property having a smaller unit count would actually potentially increase the risk of the property. There's less units to spread the expenses over, and additionally, trying to maintain market vacancy would be a lot more challenging. So on page 10, we have our income and expense breakdown. So the way that the rents are reported by the owner, the vacancy is already accounted for, so we don't include it again. So the effective gross rents we're using are $180,356. And when accounting for the other forms of income, we have an effective gross income of $190,116. Our expenses include stabilized repair and maintenance at $959 per unit, for total expenses of $96,212. So our NOI is $93,904. So it's really just a cap rate issue here. So with our 5.5% gives us an indicated value of $1,707,000 rounded, which works out to a value of approximately $100,000 per unit. So if you turn to page 12, it's the start of our appendix, and I've included some interior marketing photos from the website. So they are staged, but it's just to give a better sense of the finishes of the units. As well, we have the city valuation and the financial statements that we've looked at, and our repair and maintenance breakdown can be found on page 26. So in this case, it would just be a 4-year average, as we didn't have the itemized breakdown for 2020. And that would conclude my presentation for this property. Thank you.
I thank you. Mr. Valderrama, questions of the applicant?
I have none, Mr. Chair. Thank you.
Thank you. Ms. Anderson?
I have no questions. Thank you for your presentation.
I thank you. Mr. Sealing?
No questions, Mr. Chair. Thank you very much.
Okay, either party want summation?
I have none. Thank you.
I'm good also.
We're gonna do just a couple more, seeing that, you know, I'm looking, and then we'll have a little break. So we'll go on to 205 Rupert's Land Avenue. Mr. Valderrama, whenever you're ready.
Thank you, Mr. Chair. Next property has a file number of 22-2187. The property has a roll number of 11-010-216-000. The property is located at 205 Rupert's Land Avenue. Dealing with the roll year of 2023 using reference date of April 1st, 2021, the assessed value is $1,259,000. Property is classified as residential 2 with a liability of taxable. Property is a residential apartment with 1 building and 2 stories. It has an actual year built of 1950 and effective year built of 1960. It has 11 suites with 5 outdoor parking. The property is zoned as residential multifamily with a land area of 8,401 square feet, a plan area of 3,295 square feet, and a basement area of 3,295 square feet. The total gross floor area is 9,885 square feet. On page 3 is the aerial photo of the subject property. And on page 4 is the income valuation summary. There are 11 units with an average monthly rent per unit of $978.95. The gross potential rent is $129,221. The vacancy rate is 4.2% or $5,427. Effective gross income comes down to $123,794. The expense ratio is 48.15% or $59,607. The total net operating income is $64,187. Applying the capitalization rate of 5.1% to the net operating income, the capitalized income is $1,258,569 or $1,259,000 rounded. On page 5 are some rent comparables. The first one is located at 201 Belmont Avenue. Has an average monthly rent per unit of $1,003. The second one is located at 1156 McPhillips Street. It has an average monthly rent per unit of $1,036. The third one is located at 1164 Jefferson Avenue. The average monthly rent per unit is $1,087. And the fourth one is located at 1168 McPhillips Street. It has an average monthly rent per unit of $1,029. On page 6 is the photo of the subject property and comparable rents. On page 7 is the capitalization rate chart. On page 8 is the capitalization rate evidence. Beginning of page 9 to page 11 is the 2020 income and expense information that's submitted to our department. And that's my presentation, Mr. Chair.
I thank you. Ms. Gates, any questions of the assessor?
No questions. Thank you.
I thank you. Ms. Anderson?
I have no questions. Thank you.
I thank you. Mr. Celine?
No questions, Mr. Chair. Thank you.
Okay, I thank you. Ms. Gates, your presentation?
Thank you. So if you turn to page 2, you'll see our requested assessment of $1,131,000. On page 4, we have our property description. So the subject property is located on Rupertsland Avenue at its intersection with Main Street in the Jefferson area. The property is a 2.5-story apartment built in 1950 with an effective age of 1960 assigned. And the land size is approximately 8,000 square feet. And there are 11 units, which are 5 1-bedrooms and 6 2-bedrooms. And there are 9 outdoor parking stalls noted. So you'll see the aerial view of the property. On page 8, we have the overview of our income approach. So we are disputing the assessor's cap rate of 5.1%, and we are using a cap rate of 5.5%. This is our base cap rate, and we've not made any adjustments. So if you turn to page 9, we have our income and expense breakdown. So we are using rents of $109,175. We've applied a market level vacancy rate. And when accounting for the other forms of income, we have an effective gross income of $107,210. And for the miscellaneous income, I just used an average as it kind of varies over the years. So our expenses include stabilized repair and maintenance at $537 a suite, which is quite low, but that is what they've reported. So that's what we've used. And our total expenses are $45,003. So our net operating income for the property comes to $62,207, and with a 5.5% cap rate, gives us our indicated value of $1,131,000, which works out to approximately $102,000 per unit, which would be on the higher end for a property of this age. And then on page 11 is the start of our appendix. So I've included some interior photos from the website to get a better sense of the finishes. And then as well, we have the city valuation we've referenced and the financial statements we've used. And then on page 28, we have our repair and maintenance breakdown for the property. And that would conclude my presentation. Thank you.
I thank you. Mr. Vanlarama, questions?
I have no questions, Mr. Chair. Thank you.
Thank you. Ms. Anderson?
I have no questions. Thank you for your presentation.
Thank you. Mr. Celine?
No questions, Mr. Chair. Thank you.
I have none. Either party wants summation?
I have no summation, Mr. Chair. Thank you.
Oh, thank you.
All right. We're going to take probably about a 10-minute break. So we will reconvene at 10:50.
Thank you,
Is that
Mr.
okay, everybody?
Yes, thank you, Mr. Chair.
Thank you, Mr.
Okay.
Chair.
Thank you, Jez. We'll call the hearing back to order, and we have 3 more properties to go. So the next one we're going to do at 311 Partridge Avenue. So Mr. Vandarama, whenever you're ready.
Thank you, Mr. Chair. Next property has a file number of 22-1792. It has a roll number of 11030199000. The property is located at 311 Partridge Avenue. The roll year is 2023, using reference date of April 1st, 2021. The assessed value is $7,454,000. The property is classified as a residential 2 with a liability of taxable. The property is a residential apartment with one building, 6 stories. Its actual and effective year built is 1978. It has 60 suites with 69 outdoor parking. The property is zoned as residential multifamily. There's a land area of 45,233 square feet, a planned area of 12,394 square feet, and a gross floor area of 72,704 square feet. On page 3 is the aerial photo of the subject property. On page 4 is the income valuation summary. There are 60 units with an average monthly rent per unit of $1,157.80. The gross potential rent is $833,616. The vacancy rate is 4.2% or $35,012. It has an effective gross income of $798,604. Expense ratio of 51.93% or $414,715. The net operating income comes down to $383,889. Applying the capitalization rate of 5.15% on the net operating income, the capitalized income is $7,454,155 or $7,454,000 rounded. On page 5 are some rent comparables. The first one is located at 20 Pipeline Road. It has an average monthly rent per unit of $1,164. The second one is located at 1075 Andrews Street. It has an average monthly rent per unit of $1,245. The third one is located at 445 Partridge Avenue. It has an average monthly rent per unit of $1,271. And the last one is located at 1245 Jefferson Avenue. It has an average monthly rent per unit of $1,196. On page 6 is the map of the subject property and comparable rents. Page 7 is the capitalization rate chart. On page 8 is the capitalization rate evidence, and pages 9 up to page 10 is the income and expense information for 2020 for the subject property. And that's my presentation, Mr. Chair.
I thank you, sir. Ms. Katz, questions of the assessor?
Yes, thank you. So in looking at your I&E info on page 9 and 10, would you agree that in looking at the financials that the property tends to run high expenses?
It has $445,000, $406 in terms of expenses. So is that high for this property? I'm not sure. That's the actual. So
Okay, and had you considered using the actual expenses in your evaluation?
no, I went with the model on the on page 4.
Okay, thank you. That would conclude my questions.
I thank you. Ms. Anderson?
So just to confirm then, the valuation is all model generated. There was no overrides in any area?
I don't think so. It's all model derived parameters.
Okay, and do you have noted on file when the last inspection of this building was?
No, I wasn't able to check on that, and I wasn't able to inspect the property and neither. So
Okay, thank you very much. Thanks for your presentation. Those are all my questions, Mr. Chair.
thank you.
Thank you. Mr. Selim?
All my questions have been answered, Mr. Chair. Thank you very much.
I thank you. Mr. Valderrama, the cap rate, it's all model driven of 5.15.
Yes, sir, it is.
This is a 60-unit apartment building, 6 stories.
Yes, it is.
Nice neighborhood, a good rental market in the area.
I would say there's a lot of rental properties in this area in terms of apartment blocks.
So you feel as if the 5.15 cap rate is applicable to the subject?
Yes, it is.
All right, I thank you. Ms. Katz, Gates, I'm sorry. Your presentation.
Thank you. So if you turn to page 2, we have our requested assessment of $6,101,000. On page 4, we have our property description. So the subject property is located on Partridge Avenue at its intersection with Power Street in the Jefferson area. The site size is approximately 1 acre, and the split of units would be 24 one-bedrooms and 36 two-bedrooms. And there are 69 outdoor parking stalls noted. So you'll see the aerial view and the Google Map view on the next page. So if you turn to page 8, we have an overview of our income approach. So we are disputing the assessor's cap rate of 5.15%. And we are using a cap rate of 5.5% based on our study. That is our base cap rate, and we've not made any adjustments. So if you turn to page 9, we have our income and expense breakdown. So we are using rents of $818,862, and we've applied a market vacancy rate to the property. And when accounting for the other forms of income, we have an effective gross income of $803,943. So our expenses include stabilized repair and maintenance at $2,018 per suite. Total expenses of $468,405. Our NOI is $335,538. And with a 5.5% cap rate, gives us our indicated value of $6,101,000 rounded, which works out to a value of approximately $101,000 per unit. So if you turn to page 11, it's the start of our appendix. So I have some interior photos that are from the property manager's website. And as well, we have the city valuation we've referenced, the financial statements that we've looked at, and our detailed repair and maintenance can be found on page 21. And that would conclude my presentation for this property. Thank you.
I thank you. Mr. Valderrama, questions?
I have none, Mr. Chair. Thank you.
Thank you. Ms. Anderson?
Just looking on your page 9 in repair and maintenance there, in 2020, there was repair and maintenance was quite high, $160,318. Can you add some background on that?
Yeah, I don't have specific background on why it's higher, but I know that this owner does invest money into their suites. So I think the better sense of the breakdown, to make sense of the R&M, we can look at page 21. So we see there are some higher ticket items included in there with electrical and plumbing. So those have been excluded from our stabilized value. But in terms of the line items on the income and expense breakdown for repair and maintenance, those are not stabilized values.
Okay. So then in your opinion, is this good quality stock? Like it's well maintained, obviously, then?
Yes, it is well maintained. Yeah, I would say the condition is good. The finishes are a bit more basic, but the condition is good. We've done an adjustment for condition. But I would say too, it is in a competitive area in terms of multifamily.
Okay, and you've made no adjustment to the cap rate for any considerations other than in accordance with your cap rate study, right? It falls at 5.5.
Yeah, I've made no adjustments either way. I don't feel like it needs any type of upward adjustment. It's a good quality apartment, but it is more basic, and there's not really amenities or things that we would see with those really low value cap rates. So I think for kind of a middle of the road property, that kind of mid-range 5.5 makes sense here, given its 70s build, good quality construction, but not really much else to offer the tenants.
Okay. Okay, thank you very much. Thanks for your presentation. Those are all my questions, Mr. Chair.
I thank you, Mr. Celine.
All my questions have been answered, Mr. Chair. Thank you very much.
I have no questions, so summation either party?
I have none, Mr. Chair. Thank you.
No, thank you.
All right. Let's stick around the same area and we'll go to 1035 Powers Street. Mr. Assessor, whenever you're ready.
Thank you, Mr. Chair. The next property has a file number of 22-1796. Property has a roll number of 11-030-204-000. The property is located at 1035 Powers Street. We're dealing with the roll year of 2023 using reference date of April 1st, 2021. Assessed value is $4,129,000. The property is classified as a residential 2 with the liability of taxable. The property is a residential apartment with 1 building, 2 stories. It has an actual and effective year built of 1969. It has 45 suites with 45 outdoor parking. Property is zoned as residential multifamily with a land area of 43,332, a planned area of 13,075 square feet, a basement area of 13,075 square feet, and a gross floor area of 39,125 square feet. On page 3 is the photo of the subject property. And on page 4 is the income valuation summary. There are 45 units with an average monthly rent per unit of $911.20. The gross potential rent is $492,048. It has a vacancy rate of 4.2% or $20,666. It has an effective gross income of $471,382. The expense ratio is 54.45% or $256,667. The net operating income comes down to $214,715. The capitalization rate is 5.2%. When applied to the net operating income, the capitalized income is $4,129,135 or $4,129,000 rounded. On page 5 are some rent comparables. The first one is located at 1055 Powers Street. The average monthly rent per unit is $980. The second one is located at 133 Matheson. Its average monthly rent per unit is $928. The third one is located at 1245 Jefferson Avenue. It has an average monthly rent per unit of $1,196. And the fourth one is located at 707 Lila Avenue. It has an average monthly rent per unit of $1,061. On page 6 is the map of the subject property and rent comparables. Page 7, the capitalization rate chart. On page 8 is the capitalization rate evidence. And beginning of page 9 to page 10 is the 2020 income and expense information for the subject property. And that's my presentation, Mr. Chair.
Thank you, sir. Ms. Katz,
I have no questions. Thank you.
I thank you. Ms. Anderson,
I have no questions. Thank you.
thank you. Mr. Celine,
No questions, Mr. Chair. Thank you.
I have none. Ms. Gates, your presentation.
Thank you. So if you turn to page 2, you'll see our requested assessment of $3,954,000. On page 4, we have our property description. So the property is located on Powers Street between its intersections with Royal Avenue and Partridge in the Jefferson area. The property is a 2.5-story apartment built in 1969, and its land size is approximately 43,000 square feet. There are 45 units, which include 33 one-bedrooms and 12 two-bedrooms. and there are 51 outdoor parking stalls noted. So you'll see the aerial view and the Google Map view on the next page. So for an overview of our income approach, you could turn to page 8. So we are disputing the assessor's cap rate of 5.2, and we're applying a cap rate of 5.5% based on our study. In terms of all of the factors we considered, I did see on their website that there were some renovated units. So I initially accounted for that as possibly an amenity of the building. But in looking further into how many units were actually renovated, there's only 3 units that have been completely renovated. So I'm not sure I would really put as much weight on that, given the low number. So if you turn to page 9, we have our income and expense breakdown. So we're using rents of $541,637. And we note for this property that as the rents increase, we're seeing the vacancy go up. So we have opted to use a higher vacancy to reflect that relationship. And when accounting for the other forms of income, we have an effective gross income of $500,695. We have stabilized repair and maintenance at $2,288 per unit, which similar to the last property is on the higher end, but if they are investing into the suites, then it does make sense. So we have total expenses of $283,233. We have a net operating income at $217,462. And with a 5.5% cap rate, gives us our indicated value of $3,954,000 per unit, which works out to approximately $88,000 per unit. So our appendix starts on page 11. So I've included some photos of the units. So this would be kind of the best units of the property in terms of the renovations, as well. There's some photos of probably what a more standard unit of the property would look like. And then on page 20, we have our city valuation and the financial statements. And then on page 26, we have our detailed repair and maintenance breakdown for the property. And that would conclude my presentation. Thank you.
I thank you, Ms. Cates. Mr. Valderrama, questions?
I have none, Mr. Chair. Thank you.
I thank you. Ms. Anderson?
Just in regards to the vacancy percentage applied, can you explain again why the vacancy of 9.2% is applied?
So when we're looking at the property, there is a relationship between the rents and the vacancy. And even though they are discounting the rents, as the rents do increase, their vacancy of the property is increasing. So I've opted to use a higher vacancy, given that the rents they're getting in 2020 is going to be reflective of the vacancy as well. So that's why I've opted to use that rate.
Okay. Thank you very much. And one other question, you said 3 suites have been completely renovated that you provided pictures for. And so are you aware, are the suites being renovated as they turn over, or it's an overall project for the entire facility?
I would assume that there would be renovations as they turn over. So what they told me is that 3 suites were renovated in 2021, and then there's plans for 2 more to be renovated, but they haven't started those other 2. So it seems kind of like a slow project.
Okay. Thank you very much. I appreciate your presentation.
Thank you.
I thank you. Mr. Celine?
Thank you, Mr. Chair. All my questions have been answered.
All right. Summation, either party?
No, thank you.
I have none.
All right.
Thank you.
Let's go to the last property, which is 1000 Salter Street. So, Mr. Valderrama, whenever you're ready, you can take us through this.
Thank you, Mr. Chair. Last property has a file number of 22-2547. The roll number is 11-030-210-000. The property is located at 1000 Salter Street. We're dealing with the roll year of 2023 using reference date of April 1st, 2021. The assessed value is $9,277,000. The property is classified as a residential 2 with a liability of taxable. The property is a residential apartment with 2 buildings, 3 stories, an actual and effective year built of 1972. It has 96 suites with 96 outdoor parking. The property is zoned as residential multifamily with a land area of 114,447 square feet, a planned area of 29,450 square feet, and a gross floor area of 88,350 square feet. On page 3 is the aerial photo of the subject property. On page 4 is the income valuation summary. There are 96 units with an average monthly rent per unit of $934.23. The gross potential rent is $1,076,233. The vacancy rate is 4.2% or $45,202. The effective gross income is $1,031,031. The expense ratio is 51.86% or $534,693. And the net operating income comes down to $496,338. Applying the capitalization rate of 5.35%, the capitalized income is $9,277,346 or $9,277 rounded. On page 5 are some rent comparables. The first one is located at 1000 McGregor Street. It has an average monthly rent per unit of $1,018. The second one is located at 707 Lila Avenue. It has an average monthly rent per unit of $1,061. The third one is located at 2130 Main Street. It has an average monthly rent per unit of $918. And the fourth one is located at 445 Partridge Avenue. It has an average monthly rent per unit of $1,271. On page 6 is the map of the subject property and comparable rents. Page 7 is the capitalization rate chart. On page 8 is the capitalization rate evidence. And on page 9 up to page 10 is the income and expense information for the subject property. And that's my presentation, Mr. Chair.
I thank you, sir. Ms. Katz, whenever you're ready, or your questions, please.
I have no questions. Thank you.
I thank you. Ms. Anderson?
Just to confirm, this was all model generated. There's been no overrides on it in any areas or reviews of any areas?
These are all model derived parameters. Thank you.
Okay, thank you. No further questions.
I thank you. Mr. Siling?
Just to confirm, as you mentioned, this property hasn't been inspected, or do we know it's been inspected recently?
I haven't personally inspected this one. With regard to other inspections, I'm not sure when it was last inspected.
Thank you very much. That's all my questions, Mr. Chair.
I thank you. Mr. Vallarama, these are 2 buildings. Are they identical? Do you know?
The picture on page 3 looks like they are
Yeah.
identical.
Yeah, I think one fronts on Salter Street and the other one fronts Lila.
Partridge or Partridge, yeah.
Yeah.
Looks like
Partridge?
yes, Partridge, I believe, sir. That's Partridge right there.
There's a railway track right behind it.
Railway track right behind it. I don't see it in my picture on page 3,
All right.
sir.
Okay. Is there a fire station in front?
Fire station by Salter. I don't let me just check the map.
I think by McGregor. By
McGregor, I don't see it in my map.
Okay.
Not sure where
fine.
it is in the no, I cannot determine that.
Okay. Ms. Katz, whenever you're ready, you can take us through your presentation, but maybe you could enlighten us in regards to the location of this property on Salter.
Okay, sounds good. So if you turn to page 2, you'll see our requested assessment of $7,130,000, as well as a couple of exterior photos showing the 2 buildings. So if you turn to page 5, we have our property description. So the subject property is located on Salter at its intersection with Partridge Avenue in the Jefferson area. And the property has 2 3-story apartments, and the land size is approximately 2.6 acres. There are 96 units, which include 54 one-bedrooms and 42 two-bedrooms, and there are 96 outdoor parking stalls noted. So if you turn to page 6, you'll also see a Google map view. And I believe the fire station is located on the intersection with McGregor, so a bit farther back. On page 9, we have an overview of our income approach. So we are disputing both the NOI and cap rate. We are applying a cap rate of 5.5%, whereas the assessor has applied 5.35%. And that would be our base cap rate, and we've not made any type of adjustments to it. So on page 11, we have our income and expense breakdown. So we have rents of $955,424. We've applied a market vacancy rate of 4.2% to account for vacancy and collection loss in the long term of the property. And when accounting for other forms of income, we have an effective gross income of $950,642. We have stabilized repair and maintenance at $1,322 per suite for total expenses of $558,475. We have a net operating income for the property of $392,167, and with a 5.5% cap rate, gives us our indicated value of $7,130,000, which works out to approximately $74,000 per unit, which does make sense. The units are on the smaller end. Our appendix starts on page 13, and we have some interior photos of the common area as well as of the suites, just to give a better sense. So they are, I would say, dated and fairly basic. And then starting on page 20, we have the city valuation and the financials that we've looked at. And then we have our repair and maintenance on page 26. So we don't have an itemized breakdown, but just the totals. But at $1,300 a unit approximately, that seems to be within range. And that would conclude my presentation on this property. Thank you.
Thank you kindly. Mr. Valderrama, questions?
No, I have none, sir. Thank you.
All right, thank you. Ms. Anderson?
I have no questions. Thank you for your presentation.
I thank you. Mr. Celine?
I believe you mentioned that you haven't inspected any of the units. Is that the same for this one as well?
That would be correct.
And the condition you have noted in here is average?
Yeah, I would say it's average in terms of looking at the interior photos of the units. Keeping in mind that these are from their website, so these would be kind of being used as marketing photos. So, but I have not made any type of downward adjustment to the cap rate for the condition, but just based on what I've seen here, I would probably call these average.
Thank you very much. That's all my questions, Mr. Chair.
I thank you. Either party wants submission?
I have none, Mr. Chair. Thank you.
All right. Mr. Valderrama, I thank you for all your work here and your presentation. So you are free to go and have a pleasant day and a pleasant weekend.
Have a nice weekend too, sir.
Thank you for your presentations and results very soon, and you are free to go. So I can tell you that we have heard all the scheduled items for this, and this hearing is now adjourned. So thank you both very kindly.